Michael Lee. For years, that name has been synonymous with wealth in Jamaica. The billionaire with the big yacht, the man who bought back our bank. For many, he symbolized what was possible when a Jamaican dared to dream big. But lately, a different story has been circulating. Bondholders not getting their money on time, interest rates being cut, properties being sold, a luxury yacht disappearing from the picture. And suddenly, the question everyone is asking is this: is Michael Lee actually broke? Now let's be clear. This isn't about scandal or gossip. This is about understanding what's happening with one of Jamaica's most well-known businessmen. Because here's the truth. Wealth isn't only about what you own on paper. It's like having a big fancy house, but you can't pay the light bill. On the outside, it looks impressive. But inside, when the lights go off, it's a whole different story. So let's slow it down, unpack this step by step, and talk about the rise, the challenges, and what this all means for Jamaicans today. To understand what's happening now, we have to go back to the beginning. Michael Lee was born in Port Antonio, Jamaica, into a modest family. He later migrated to Canada, studied civil engineering, and started working in financial services. His big break came in the 1980s. While working as a financial advisor, he saw that a company called Mackenzie Financial was undervalued. So he took a bold step. He borrowed $500,000 Canadian dollars, money he didn't really have, and invested it all. That gamble paid off. Within a few years, those shares skyrocketed and turned him into a multimillionaire. That win shaped his philosophy: buy undervalued companies, hold them long-term, and let growth do the heavy lifting. This strategy led him to create AIC, Advantage Investment Council, a mutual fund company that eventually managed more than 15 billion Canadian dollars at its peak. Then came the move that cemented his name in Jamaica. In 2002, he acquired National Commercial Bank, or NCB. At the time, NCB was struggling. Most people thought it was a bad bet, but Lee stepped in, restructured, and rebuilt it into Jamaica's leading financial institution. That one purchase made him a household name. And it wasn't just about banking. He also bought luxury assets. The super yacht, quintessential multi-million-dollar real estate, and investments in telecoms, tourism, and energy. For many Jamaicans, he wasn't just a businessman. He was proof that someone from humble beginnings could rise to billionaire status on the global stage. But even while the image looked untouchable, cracks had already started forming. AIC, his Canadian mutual fund empire, collapsed during the global financial crisis of 2008 and 2009. Assets under management fell from $15 billion to less than $1 billion almost overnight. Eventually, he had to sell AIC to Manulife. For most people, that would have been the end of the story, but not for Lee. He still had Portland Holdings. He still had NCB, his crown jewel, and he still carried the image of a billionaire. But here's the key lesson. Owning big assets doesn't mean your financial house is unshakable. A skyscraper in Kingston looks good, but if your cash flow dries up, that skyscraper won't pay tomorrow's bills. And that's the tension that started to reveal itself after AIC's fall. Now, let's talk about what's been making headlines recently. The bondholders. Lee companies like AIC and Portland Private Equity raise money by selling bonds. A bond is basically a loan. Investors, many of them retirees, lent him money in exchange for steady interest payments. In Jamaica, retirees love bonds because they're supposed to be safe, predictable, and secure. But in recent years, those bondholders have faced something very different. Interest payments have been reduced. Some payments have been delayed. And reports say Lee himself has appealed to bondholders, asking for more time to repay their money and for them to accept lower interest rates in the meantime. Think about what that means in real life. Imagine you're retired. You worked for 40 years. You saved your money and you put it into bonds because you were told they were safe. You depend on those monthly payments for groceries, for your blood pressure medication, maybe even school fees for the grandkids. Then one day, you get a call. Sorry, we can't pay you the full amount. Can you take less and wait longer? That's not just numbers on a page. That's the rent, that's the light bill. And for Jamaicans who trusted in Michael Lee Chin's reputation, it hit hard. So why is this happening? Lee Chin explained that he relied on dividends from NCB to pay bondholders. But for several years, NCB didn't pay any dividends at all. And here's where the criticism comes in. During that period, Lee Chin wasn't just a shareholder. He was chairman of the board, which means critics argue he was in a position of influence over whether dividends were paid or not. It's kinda like being the chef and the restaurant owner and then telling the customers there's no food because the kitchen didn't deliver when you were the one in charge of the kitchen. Fair or not, it raised serious questions about accountability. Bondholders also noticed another worrying sign. Experienced senior executives were being released from his companies. When you see capable leadership suddenly walking out the door, it feels like a red flag. It's like being on a plane, mid-flight, and watching the captain leave the cockpit. You don't know exactly what's going on, but you know it can't be good. For many investors, that was the moment they realized something serious was happening. On top of all of this, NCB's share price has fallen sharply in recent years. That matters because most of Lee Chin's wealth is tied directly to NCB stock. So when the share price goes down, so does his net worth. And here's the big difference. Wealth on paper versus wealth in real life. Owning billions in stock is like owning a Mercedes with no gas money. On paper, you look wealthy, but in practice, you're stuck in the driveway. And this is where the story goes beyond Michael Lee Chin himself. For ordinary Jamaicans, this is a wake-up call. Wealth isn't about what looks good today. It's about what's sustainable tomorrow. Diversification matters. Don't put all your eggs in one basket, no matter how shiny that basket looks. And accountability is everything. If you borrow, pay it back. If you promise, deliver. Trust is built on keeping your word. For retirees especially, this story hits home. Financial decisions made at the top ripple all the way down. When bondholders don't get paid, it's not just investors in suits who are affected. It's teachers, nurses, grandparents, ordinary Jamaicans who thought their retirement was secure. So maybe the real question isn't, is Michael Lee Chin broke? Maybe it's this. If someone of his stature can run into liquidity problems, what does that say about the rest of us? It reminds us that financial literacy, accountability, and sustainability matter at every level of society. So, is Michael Lee Chin broke? We can't say that. But what we can say is this. The image of wealth is not always the reality of wealth. And for Jamaicans, this story is more than gossip. It's a lesson in money management, risk, and responsibility. Because whether you're managing billions of dollars or a few thousand in savings, the principle is the same. Real wealth isn't about flash, it's about resilience. This video is for informational and educational purposes only. It is based on publicly available reports and commentary. It does not claim or suggest that Michael Lee Chin is bankrupt or insolvent, and no defamatory statements are intended. Viewers are encouraged to do their own research and seek professional advice before making financial decisions.